Hey everybody, welcome to May. I'm going to go into some of the April real estate stats here for the London and St. Thomas market. A lot of this will translate into other markets in terms of patterns, but we'll dive into some of the numbers. We'll take a quick look at some interest rate discussions, and then we'll take a look ahead into May to see kind of what maybe we can expect in what should be one of the busier months of the year for real estate. So real quick, let's go into some of the numbers here. So price is pretty unexciting. In terms of April, April's usually one of the busiest months, April and May for sure, in terms of transactions, in terms of appreciation, that kind of deal. If we look at April, average price came in just over 650,000. That's up about $4,000 month over month, but it's down about 19K year over year. So about 1% month over month, down about 3% year over year. We are still up 3% over the 5-year average. So not the worst, but again, really important to keep in mind that prices today are pretty much the same as we saw 3 years ago, very, very similar. So again, not impossible. We see that trend repeat over the next 3 years. It's hard to make accurate long-term predictions, but it's not unprecedented. So that's price. Let's take a look at sales. So sales, like I said, sales is usually the peak months here historically are usually April, May, June. If you look at a lot of these past years and peaks, May, month before April is usually the second most, if not the most active month. Well, this year it's a different story. We only had 675 sales for the month of April, which is very underwhelming compared to seasonal trends. So from a sales standpoint, we were down about 3% month over month, but down about 9% year over year. And even worse, we're down 24% over the 5-year average. So it'll be interesting to see what happens here. If we see this kind of level off over this next month, or if maybe some of that pent-up demand is seen in May, we'll have to keep our eye on that. If we look at new inventory, so new listings that hit the market, now this trend did continue on. So we did see the inventory spike even higher than last month. We had just under 1,400 units hit the market in April. Now this is more typical of a spring April market. If we look over year, we were still up 14%. Sorry, month over month, we were up 14%. Year over year, we were actually up 43% in terms of number of new listings hitting the market. But over that 5-year average, we're only up 3%. So it's not super crazy to see this type of number in April. Now, I should say, when I say the 5-year averages there, with the exception of price, for sales and new listings, I am omitting being is 2020 is when in the spring market is when we first started seeing the lockdown. So it was a very, very, very much an anomaly in terms of a data point. If I look at activity in April 2020, like it just plummeted there from March 2020. We only had 656, but nobody was really doing anything then. And same thing with new lists or sales. If I look at sales, it was very, very low in that April 2020. So I omitted that just because I think it kind of waters down the numbers, and it's unlikely that we're going to see that same scenario play out again in the future. So I just included another 2019 data in order to come up with the numbers there. So in terms of days on, or not days on market, months supply. So this is now shooting up. It's interesting. Yesterday they had it reading 3.9, but now it's adjusted to 3.7. So still though, we did see months of inventory increase, which just basically means that new listings are outpacing sales, which has been a trend for a while. So we did go up about half a month of inventory there. If it were at that 3.9 that it had posted yesterday, we were back to 2015 in terms of the last time we saw this much inventory. And I don't expect this trend to change in the coming months here, at least not in the next month. I think May is going to be very similar. I think we'll see way more listings than we're going to see sales. at least close to that 2-to-1 ratio anyway, which is going to push this up further. Will we get another half a month increase? Possibly. I think we for sure could cross that 4 line, which again we haven't seen since 2015. This just means we're in a balanced market. If you look at the actual number of homes for sale, same idea here. Like, we haven't had this many homes on the market since, in this case, 2016. So inventory wise, there's houses out there. It still comes back to that affordability piece, and what can people afford? What are people waiting to happen? It's like one of these sliding jigsaw type of puzzles. Seems like everybody has their own. Well, if this happens, then I can do this, and then this can happen. A lot of people right now, they're waiting for interest rates to come down. Everybody's got their own kind of target, but this is pretty repetitive for me at this point. I don't see interest rate reductions making a huge impact on the market overall, because affordability in this country on many levels is just very out of tune, let's say. It is what it is, right? I mean, let's take a quick look at what's going on in the US. So today, the US came out and said, basically, we're going to keep rates higher for longer. And that's based on the economy in the US performing well. They want to make sure that inflation doesn't come roaring back. So the US doesn't really have any plans to cut rates anytime soon. We are still what the US has for posted rates, which I'm not saying it's impossible that we see a cut in June. Like, everybody's been anticipating this for a very long time. Many people have been anticipating cuts for many cycles, and they've gone disappointed. But a good number of us have been expecting that no cuts would happen until at least the summertime. So here we are. We're on the cusp of these interest rate cuts that everybody's waiting for. But the real question is it going to make a difference? And I don't really see that making a difference, because we might see a 0.25% or a 0.5% cut, but that's not going to do much to offset affordability. And if it does increase the market activity, it's likely that the price increase that happens in that short period of time, that all this pent-up demand just suddenly bursts out the pipe, and we see a little bit of a run-up on price. Pretty quickly, that price run-up is going to erase the savings you would have had on that 0.25% or 0.5% interest rate hike. So I really don't see it changing the affordability equation in a long-term manner anyway. However, um, I do think there is pent-up demand. It's crazy that we only saw 650 or so sales in the month of April. So I think what will happen likely is we will see an underwhelming May. I think you'll see roughly a 2-to-1 list to sale ratio, probably very similar numbers in in May that we just saw in April. And then I think June will come. I think personally it's pretty much a 50-50 chance that the bank cuts or holds. My gut wants to say they're going to cut just to appease people. That being said, there's still a chance they hold. Either way, if they cut or if they hold, I think a lot of people who have been waiting will stop waiting regardless. They'll either think, well, they're never going to cut, and they'll try and get their plans executed over the summer before fall, or the cut will happen, and a lot of people will see that as a sign that things are going back to the way they were before. And I personally think that's just a foolish perspective to take. I mean, to each their own. I just really don't see us getting back towards like a 3% interest rate or sub 3% interest rate anytime soon. And we really need to be closer to that mark in order for things to make sense from an affordability standpoint. We'll see. I mean, if we look at the bond yields in Canada, so again, this is directly tied to your 5-year interest rates. Last month when we had this conversation, we were closer to the 3.5 mark. Well, bond yields are sitting closer to 3.8 now. So fixed rate mortgages have gone up since last month. And again, it doesn't seem like this is going to change, especially with how high the US economy is performing right now. That's unlikely to change. Hard to say. But I do think what we might see this year, which we don't normally see, is a busier summer. So normally the spring is very, very busy, and then summer hits, kids are out of school, people start going away for summer vacation, things like that, and the market kind of starts to slow down and taper off as we approach the winter. I think it's possible we see a late run following this June interest rate announcement, based on the lack of transactions that we saw in April and that we'll likely see in May. So that pent up demand will likely get carried over into the summer months. Um, all this said, I still expect long term, this is probably going to lead to our prices still just kind of leveling out. Like we might see a little bit of a bump in May, June, July, maybe, big maybe. I don't see us crossing this 700K mark average price wise. In fact, I think it's going to be closer to the 600K mark by the end of the year, possibly a bit lower. Like I've said in past videos, I wouldn't be surprised if at some point we dip below this 578 number that we saw in January of 2023. Again, it's not going to be a straight drop down, but I think it'll be a little up and then slowly tapering off as we see inventory continue to build, unless we see huge cuts throughout, later summer and into the fall in terms of interest rates. Still don't see that in the cards. Of course, anybody's guess, but it just doesn't logistically make sense to me. So hopefully that helps. If you guys have any questions, anything I could do to help out with your real estate needs, feel free to reach out. I'd be happy to help. Thanks, guys. Take care.